Hey folks, what's going on? And I'm asking because I do not know. I mean, this recent week for Alphabet just confuses me in all kinds of ways. As I mentioned in last week's update, I was expecting the stock to go down, but you can see from Monday of last week to Friday, between these two vertical blue lines, the stock went up about 15%, just 5 full days of upward movement. Now, it did get rejected off of this 200-day moving average, which it had trouble getting over the last year or so. But I'm just really surprised how it went up so quickly in such a short amount of time. The only news I saw was that they're raising the price of YouTube TV, and that's pretty much it. I don't think there's really any news out of the company last week, with no earnings or layoff reports. The only real thing I can think of is what the Federal Reserve has recently done with their balance sheet. As you can see from 2020 to the end of 2021, the Fed was buying assets, so that's part of the reason why the stock market went up during that time. But then, since about the summer of last year, they started to offload their balance sheet from about $9 trillion to 8.3. But just in the last week, there was this massive uptick. If I zoom into the 1 year chart, huge increase in buying instead of selling, which was the trend for the last year. So, what this means is basically the Fed has just erased all of the quantitative tightening they've been doing since the beginning of this year. So, this would take us back to November 2022, last year. And the only reason they would buy a huge amount of assets like that is to inject more liquidity into the markets because they've probably broken something. This is essentially going back to quantitative easing again. A lot of other tech stocks were beneficiaries of the Fed's actions last week. If you remember, what I did last week was sell an 87 put, so I wanted the stock to end the week above 87, which it certainly did. But at the same time, I sold a bunch of covered calls at 93, 94, 95. I had a 96 before and a 97. So basically, 5 covered calls starting here, 93, ending 97. And of course, Alphabet blew past all of those and ended way higher than I thought it would. All of these calls from 93 to 97 were in the money. Now, instead of selling all 500 of my shares, I thought it might be better to keep at least 100 shares so I can write another covered call this week. So on Friday morning, I tweeted this out after making my transaction, which was rolling my 97 call out a week to 98. So I basically bought back my 97 call and then I sold a 98 call. It's basically just rolling it out and then up a little bit. So for today, which is Monday, a new week, March 20th, in terms of Alphabet shares, I got 400 called away. So I only have 100 shares of GOOGL this week. So I'm going to write one covered call and I'm also going to be writing some puts. So I'm not really happy how Alphabet just passed all of my short calls, but at the same time, it's not all that bad because if we look at my update now, this is what happened last week. I had 500 shares. The stock went up dramatically. I shot up to $7,900 in net gains, including all of my premiums earned so far and capital gains and losses. And that is a difference of $4,000 from the previous week, which means my annualized return is now 59%, which is higher than my target of 50%. So overall, things are going well. And what I'm expecting now is for the price to come back down a bit so I can buy more shares. So what happened last week was I made a ton of premiums because I sold pretty close to the money call options. Also, the implied volatility was high. I sold 400 stocks, 100 each at 93, 94, 95, and 96. So that's an average of 94.50. In terms of my current situation, I'm down to 100 shares now. My average cost is still $94. The stock ended at 101.62. I'm sitting on $762 of unrealized gains. And because my average selling price last week was a bit higher than my average cost, I did manage to take my realized loss down a little bit. But overall, if you take my gains and losses together and then you add on the total premiums I've earned, that's how you get the 7,915 here. So I'm about $2,000 away from my ultimate target, which is $10,000. I have about 4 months left to do that. And because I started off with $20,000, getting a $10,000 return would be a 50% return on investment over a 1 year period. So we'll have to see how that goes. What about this week? Well, I'm going to move this over to Friday, March 24th, the end of this week. Personally, I think the stock has to come down. It's being rejected off the 200 SMA. Plus, if I go over to the 4-hour chart and take a look at the MACD, you can see the blue line is curling over and it's about to point downwards. And over the last couple months, the MACD fluctuates up and down. But basically, whenever the blue line starts to point down and it goes in a downward slope, the stock typically follows that and goes lower as well. So I think I'm going to sell some calls around maybe the $89 level, because I mentioned last week as well, this orange line that I drew here represents a nice bottoming, a nice support for the stock, and I don't think it's going to drop too much below there, which is around 89. And then for my call, I'm only going to write one call this week, and if I look towards the left, it looks like the next resistance is going to be this candle over here on October 25th of last year. So that's going to put it around 104. So that's quite a big range here, but I'm going to see the option chain and see what kind of premiums I can get around these strikes. Now is not the time to be greedy. I don't want to start selling puts like 96 or 97, because the last time Alphabet had a huge move up, what happened over the next couple of weeks was not pretty. And I don't want to be buying the stock like up here at around $99 when I could be buying it down here at a much lower price. So I want to pace myself, not get too greedy, and maybe try to buy back like 300 or 400 more shares over the next 2 or 3 weeks instead of all at once. But here is the option chain for Alphabet for the expiration date of March 24th. Let's do the put first at 89. That's not going to be a lot of credit at all, just $3 or $4. Maybe I can sell a couple of puts, one at 93 and one at 92. This way, if both of these fill, then my average price would drop down to 93 from 94. So I'll put this trade in first, see if I can get $20 for that. And then for the call side, I mentioned 104 should be the next resistance level. And because I think the price is going lower, I'm going to be selling a call spread that's going to be out of the money, like around the 108 price range, because that's where the previous high was for the stock. So even if Alphabet finds a way to go above this black line, it probably won't get past the previous high here at 108. So 108 is going to be 11 cents. Maybe I'll do 107. I'm going to sell this leg and then buy the 108 for protection. If Alphabet ends the week that high, like 107, 108, what I might do is just roll this to the following week, because eventually, even if the stock wants to go to like 120 or higher, the idea is there has to be some kind of pullback, because it can't get there in a straight line. And then when it pulls back, then that's when my spread will expire worthless. But it looks like I can get about 7 cents per contract here, and I will sell maybe 4 of these contracts. So the most money I can lose on these is going to be $100 per pair minus $7. So that's a few $100s of downside risk that I'm taking. But as you can see with the delta here at just 10%, there's a low probability of Alphabet closing above 107. I'm going to lower these and see if they get filled.
Autofilled.
All right, so the 2 puts got filled at 93.92. So I'm going to put this line over here at 93 and another one at 92. So if the stock finishes between these two, what I'll probably do is just roll my 93 to the following week, because I don't like to have my average cost being not a whole number. But if it closes below 92, then I will have 300 shares at an average cost of $93. So very unlikely the stock will end exactly between 92 and 93. But that's how I'm planning to manage these two options.
Autofilled.
All right, and then the bear call got filled at 6 cents, so that's 4 of those. And finally, the covered call, just one quantity, got filled at 69. So these are my Alphabet trades for this week, which is $112 in option premiums, minus commission is $102, which is going to be $140 in Canadian. So not a lot compared to previous weeks. So let's see what happens. Thanks a lot for watching, and I'll give you another update next week.